Hi, good evening. Today is Monday, May 24th. A lot of Americans learned a new country over the weekend today, as Belarus has been in the headlines all of a sudden. And of course, I'm from Belarus, so I decided I'll give a little perspective on, maybe a little different perspective on what's happening there. So the official story is that Lukashenko forced the foreign jet to land and detained a journalist. And of course, now the West criticizes him for it. But there's a slight alternative version of the events that I'm not sure the media in America is quite showing. But there was a bomb threat that was reported on the plane. And as the plane was traveling over a nuclear plant in Belarus and over various large cities of Belarus, that the country decided that it's a little dangerous for it with a bomb threat on board and asked the plane to land in Minsk. And the pilot agreed and decided to land to Minsk. And ultimately, it was a pilot's decision to do so. And after they have inspected the plane and did not find a bomb, they have arrested a guy who was a critic of Lukashenko. But that guy was also wanted on domestic terrorism charges, which brings an interesting dilemma because I'm not sure America is the one to point fingers at, as America already set a precedent for such an event. Maybe people forgot, but in 2013, a flight from Moscow was forced to land in Austria and has been diverted to land in Austria because they thought that Snowden might be on board. Meanwhile, the flight had a Bolivian president on board. So, of course, America didn't care about that because they wanted Snowden. So now they set a precedent for such an event. So how do you blame Belarus? Double standards again and hypocrisy, just highlighting that what? America is special and might makes right? Perhaps, but then, you can't really cast a stone now. And also, on top of it, do many Americans even know that there is over 50,000 of US citizens who are currently on do not fly list in US without due process, without some of them even knowing that they're on this do not fly list. And across the world, there are over 2 million people or around 2 million people who are not do not fly list. So that's also is okay. But this guy was not even that important. Nobody even knew about him in Belarus. He wrote some articles, so what? Now all of a sudden he just became the center of the story. Something doesn't make sense, and there is, of course, something is going on behind the scenes, as Lukashenko has been tried to be removed by Europe and America for a while now. And now, of course, they have imposed sanctions on Belarus. But I'm not sure how much effect this is going to have, as sanctions have been already imposed for many, many years there now. And of course, US claims that it cares about freedom of speech, which is, of course, ironic, given that the former president of America is banned from pretty much all social media platforms to date. But yes, freedom of speech, yay. And speaking of former president, he was the first one over a year ago who said that coronavirus was leaked from a lab. And of course, the media and our famous great Dr. Fauci ridiculed him for it and said it's absurd, ridiculous. He's spreading lies, misinformation. And it only took a year for MSM to make a complete turnaround and say, well, maybe it is coming from a leak from a lab. And even Dr. Fauci is now saying that perhaps coronavirus was a leak from a lab. But Zero Hedge was banned over making that same claim in our great free country.
Well, not to mention, like the Hillary Clinton implied for 4 years, has been implying for whatever 4 or 5 years now, that the 2016 election there was some fraud or collusion with Russia to throw the election, and she was given a platform for that, and no one in media was criticizing her. But when Donald Trump implies the same thing, he's like subverting democracy and so on, and
Right.
people get put on no-fly lists for going to a rally and not going near the Capitol and so on. So it's definitely
Right.
a lot of double standards happening here.
there's so much misinformation with COVID that people get banned over saying stuff that later becomes truth. Um, and one example is Japan has such high mask compliance, like I keep saying, yet right now in Florida, where we don't have any mask compliance or mandates, very few left, uh, COVID cases are going down. And in Japan, where everybody has 98% compliance, the COVID cases are skyrocketing so high that they're about to ban Olympics. And they haven't allowed foreign travel into Japan for a few months at least, maybe even longer. And yet right now, US is issuing a travel advisory not to go to Japan, but you really couldn't already for so many months. So why is the US doing this right now? It makes zero sense.
Mm.
But anyway, back to the markets. The markets don't care about any of this. And today we had a S&P 500 rallied over 1%, almost 50 points since close, or almost 60 points since the deceptive gap down overnight. As Victor likes to say, the markets are very deceptive and like to fool everybody. So we had a gap down on Sunday open, which of course was bought, and we had a very nice rally and closed very right next to 4,200 level. And we are 40 points away from all-time highs. And it all looks very bullish, and the coast seems clear to take out the all-time high. With, I would say there is only one hesitation on my part, that we have rallied over 150 points since the low made a few days ago, which seems a little steep to go all the way to cross new all-time highs without a pullback. So I wouldn't be surprised if we test maybe 4220 level overnight and then pull back from there. But like I said, if all new time highs are likely, a little pullback along the way is also very likely. What are your option levels tell you?
Oh, actually pretty bullish right now, where there was this volatility trigger level at about 4156, which we dipped below, I guess overnight, and then rocketed right back above that level. And so what that implies where we closed is that we would expect to see decreasing volatility and therefore a slow grind higher. But it's not a guarantee of that. It's just sort of tilting the probability is more toward that. So it's a more of a bullish place to be right now, given where all the options positions are.
Right. And NASDAQ had a 2% rally. And if that continues, then that certainly is going to give more steam to S&P as well. And Tesla had a very nice day, like 5 or 6% rally as well.
Yep. Well, it's down slightly after hours, but it looks like it was as much as 5 or 6% rally at peak.
Right. And of course, Tesla is a great transition to talk about crypto, given that Elon Musk again was throwing water or rather fuel into the fire today. He said that there is a true battle between fiat and crypto right now, and on balance, he supports crypto. Then he also tweeted saying that he had some conversation with North American miners, Bitcoin miners, and he said that they agreed to publish renewable usage data, and maybe other miners worldwide would also publish their renewable data. So he changes faster than the weather. First, he blamed miners in China. Now he's talking about different miners. It's basically, I think he finally figured out that his company, Tesla, has a large Bitcoin position on the books. So he better talk it up. Otherwise, the next meetings, he won't have any profits to show, given that his cars really don't make any profits. All of his profits come from renewable energy credits and Bitcoin. So he has to straddle those two to show some profits.
Well, I think part of what's going on with this and why does he seem to reverse himself is there's a for Bitcoin and some of the other major crypto, there are some very it's really all these are built by communities. They're not like, it wasn't like a company that was started by investors and a founder with a vision. I mean, there was a founder with a vision in the case of Bitcoin, but from day one, he essentially turned it over to a community to run and to manage. And so some of these people that have been around for a very long time, they know the ins and outs down to lines of code. So when someone like Elon Musk, he might get kind of like a bird, getting its straw from different trees. You might get these little bits and pieces of information and make some pronouncement on Twitter that's not true. It's like partly true, but not true when he's worried about the energy consumption. But then, someone contacts him and corrects him who has credibility, as like a name, they're a CEO too, and they're able to set the record straight with him. Then he kind of has to walk it back a little bit. And that's partly what's happened, because I mentioned a few weeks back that most of what's done in the US, the Bitcoin mining, it's up in the Pacific Northwest where they're doing it on hydropower and other renewable power, or it's like in Arizona where they, run it on solar or something. And that's the cheapest power in the US. Why would you do it in New York where you're paying 10 cents a kilowatt? Where and it's all, not all coal based, but still it's not as renewable as it is in the Pacific Northwest, or cheap. But what I found interesting about Bitcoin, okay, so I think it's interesting to look at both the futures as well as, of course, the spots, what we're really trading, or at least I am. But the futures are interesting to watch because it's a way for traders or for institutions that, for whatever reason, they don't want to have a crypto exchange account to trade, and so there's a lot of institutions involved. The volumes are really high, but what I found very interesting that happened is, so Bitcoin itself, pretty much, and I'm going to go to daily because I think it tells the story better. That Bitcoin itself, pretty much, and the rest of crypto, pretty much, crashed further over the weekend, and or kind of had a failed rally on Friday, and then into Sunday, sold off into Sunday morning, and then it bounced really nicely. And so let's say that someone, I don't know, they knew that there were some institutions that wanted to unload. It was going to happen over the weekend, and they were sure that it would crack Bitcoin, and that Monday there would be, it would open, the futures would open significantly down, or Sunday night. Well, and so they went short the futures. What would have happened then? Well, they would have completely missed the downside, because by the time the futures open at whatever 6 p.m. on Sunday, it was maybe slightly down from where it was on Friday, but it's not very much down, and so, and it's very liquid in the first few hours of trading on Sunday anyway. So it'd be really hard to have made a profit if you had a big position. But Bitcoin clearly went, it on Friday, it went down, but then it bounced back up, but then it cracked on Sunday. And today, a really nice rally, up now up to about 30, 38, nearly 800. It got just under 40,000, which now this 200-day moving average is about 40,400. And so what I have said is, I see this as an important line for Bitcoin, and it's not bull bear, but it's sort of one that I think if Bitcoin's trading above this level, then traders will have more confidence. And the ideal, in my view, would be to see a long consolidation somewhere between the support line where it cracked through and 200-day moving average, and just have it sort of bounce around before trying to rally again. But right now it's below that 200-day moving average, and seeing it rally back above that would be, over the next, let's say, few days to week, would be really bullish. And then Ethereum, but it cracked much further than Bitcoin on Sunday, and it's rallied almost 50% off its low point of like 1720.
Right, incredible. Just to rally 50% so quickly. This is.
It's amazing to trade. Let me just say that I myself, and I didn't catch the bottom. I bought with 4-to-1 leverage. I bought a little bit of I have my long-term position, of course, but I just bought a little trading position on 4-to-1 leverage around the 2000 level. So I didn't catch the bottom, and then sold it at like 2,500. So I made, just on that small position, because it was 4-to-1 leverage, about 80% in less than a day, in a few hours. And it's just amazing to get that type of return in any kind of market. But it's that's why but I try to trade these higher probability position, these take these higher probability trades rather than trying to catch a bottom and missing it, trying to sell at the top, that type of thing. But being above this level of 25.25, where this line is, it's where Ethereum broke down, or Ether broke down, and it's off its high a little bit, just like Bitcoin. But I think staying above this level is pretty bullish, and I don't know if there's a bull bear line as there is for Bitcoin. Is way above its 200-day moving average still, but I think here again, it needs to kind of cool off a little bit and take time to build a nice base for it to rally further. I would say there's a lot going on Ethereum over the next several months with EIP 1559, and then some of the merge with Ethereum 2.0. All these things have uncertainty associated with them. It'll take, having a nice base here would be good. But both of these, I think, they rally very sharply, and I wouldn't be surprised to see a bit of a pullback over the next day or two, maybe another day of rally attempt and then some pullback. But I don't think it's worth getting concerned about if Bitcoin doesn't immediately get back above that 200-day moving average. If it broke below its previous low of 30,000, that would be bad in my view. That's bear territory. But I think so far it's bouncing and holding in there.
Right, and like you were saying before, it looks like some institutions took advantage of that recent sell-off and bought. For example, Ray Dalio today said that he owns Bitcoin, and he even went as far as saying that he would rather own Bitcoins than US bonds, because he thinks that the dollar is not a good investment right now. No interest is being paid. Bonds don't yield much. So he thinks people would eventually buy anything else, stock, gold, Bitcoin, real estate, anything but bonds. And so he also credited Ether, that he likes Ethereum, because he thinks it's more efficient.
Well, and as it converts to a proof of stake platform, it will consume something like less than 1% of the energy that it does right now, and the costs will be lower and so on. But there's still some uncertainty around that, which is why Ethereum it's riskier, a little riskier, but it has that potential. But I think the use case is different than Bitcoin, and maybe Bitcoin is sort of the currency alternative to the dollar, or bond alternative as a store of value. Now, people knock that claim because of its volatility, but Ethereum has a different use case in that it's the basis for an alternative financial system. Like, instead of keeping your money in a bank account where it's earning 0.1% interest annually, you can take the bank out of the picture and have this sort of peer-to-peer collateralized peer-to-peer lending network where you're able to make much better returns, and you can hedge, and what Yelena and I were talking about before we started recording is next time I'll talk about, because I think that if we see we'll talk about some of the hedging tools that you can use on Ethereum as well as for Bitcoin too. But I think that it might be a good entry point if it does pull back here in the next few days. And then the next question is, well, all right, so you bought a little down here in the 2400 range. What then? And as we come closer to some of these previous points that might represent resistance, it might be good to have a little bit of a hedge on these positions and protect yourself from some downside. And so we can talk about how to do that. And I think that there are some good ways to do it with both Bitcoin and Ethereum and others, but those are the top two. But so we'll talk about that next time.
Right. Yes, definitely. That's very interesting. Given the volatility, people
Right.
want to hedge it. Right.
Right. And you can profit from, I mean, my preference is although I do occasionally put on some shorts, it's very rare. I'm much more comfortable being long, but it's like you can manage your long exposure, but then if you're able to be long on one of these rallies, and then you take the profits in cash, or you take them in stable coins, and then you do something with those stable coins to earn money, then you can quickly build up a cushion that's not affected by the volatility.
Right. And speaking of stablecoins, like I was saying before, I really didn't think that federal government is threatened by Bitcoin at all. But over the weekend, I've read an interesting Fed report about stablecoins. And it seems like the Fed is a little concerned about stablecoins being used as an alternative private form of money. They don't like it because they feel like it's going to be a burden for the consumer, raise costs, create uncertainty, risk, potential volatility, and inefficiency, fraud, instability, and all of those negative things that they associated with stable coins. So if Fed is so much concerned with stable coins, and I've read various reports of other people on Twitter and being concerned with stable coins as to an effect that they're not backed by US dollars. They're supposed to be backed by US dollars 1-to-1, but there are rumors that they're not. And so Fed is concerned about it. I wonder if they will somehow try to regulate stable coins to make them more compliant with rules for US banks and accounting and issuance and backing, etc.
Well, some of them would welcome that. Okay. And what I mean by that is there's one called USDC, USD coin, and they actually are audited and one-to-one backed with US dollars. And that's a New York-based company, which New York is the hardest state in the country to do crypto business, and because of all the regulatory requirements. And so,
but many of them are based somewhere on obscure islands without.
right, exactly. Some of them, like Tether, is
Tether.
like Cayman Islands, something like that, crazy. And but I think that the ones that have gained a lot of popularity are, there's USD coin, which is the really the biggest one after Tether, and And that's the one that I like the best because I know it's backed 1-to-1 with dollars and it's not going to blow up. They're always back, and they audit it and they publish the audits by an accounting firm. And then there's the decentralized alternatives, like what's called DAI, that's on Ethereum. USD coin is on multiple platforms, not just Ethereum, but DAI is one that is it's decentralized, so it's not, there's not like a bank managing it, but it's managed by collateralized assets, and its whole portfolio of crypto that's backing it, like 4-to-1, 400% collateralization. So even though Ethereum fell by something like 65% because the collateralized portfolio is backed, they'd had to do some liquidations, but private liquidations, not themselves getting liquidated, but they liquidated their the people that had loans from them because they had to. But USD coin doesn't have that kind of banking aspect where they're issuing a currency based on loans. It's all 100% backed. But some people have talked about Tether as being this risk factor in crypto. There's something to it. I don't want to dismiss it. On the other hand, the people that float that kind of I would call it FUD, or this kind of fear. They tend to be people that they would stand to benefit if there really were a problem, and they would stand to benefit if Bitcoin blew up. And there's some different parties that are associated with crypto that push this kind of thing, and it goes through cycles, and they choose to publish it when the market's already down, and in order to exacerbate any kind of downside and fear. And so there's just a lot of because this is not a security, and because it's not like the SEC is going to come in and bust somebody for spreading this kind of rumor like they would on a stock. They do it. I mean, they do it with impunity.
But I think it's also very reasonable to assume that some percentage of crypto is outright fraud, because this is just human nature. If there is no oversight, bad actors will inevitably produce some fraud entities to make money when there is no oversight and no punishment, possibly, if they manage to escape on some islands before it all collapses. So
well, that's why you go with so that's what the purpose of crypto was to begin with, is that it should be a trustless form of exchange, that you shouldn't have to trust a party, a centralized entity. And that's the purpose of decentralized currencies. And so something like Ripple, or there are some others that are very centralized, or Binance coin, some of these that they may be, Binance may be great. I've been fine with it when I've used it, but they could close up tomorrow and say, the currency is worthless. Whereas Bitcoin is not managed by one exchange or a central entity. It's a whole network of people.
Well, it seems to be managed by Elon Musk lately. But I guess my point is that even if crypto is decentralized, there are certain people who could influence it, or certain even entities who could influence the pricing. For example, Dogecoin is obviously a better example than Bitcoin. With Dogecoin and Elon Musk completely pumping it into its current price out of oblivion. And even today, he said that he finally realized he cannot find any developers for his favorite joke currency. So he tweeted that he's soliciting Dogecoin developers. If you like to help develop Doge, please submit ideas to this site or that site. And
right. Well, there were developers of this back in 2017. I think they first developed in 2014 or so, when the first sort of altcoin rally really happened. And this was sort of a joke that was being used to make fun of some of these altcoins that were launching that were really unviable. And but the reason why there are any developers is because the people that developed this first, they've moved on to other things and their lives, and they've they've retired, or they're investors, or they're doing something else now, and they don't really want to be involved with this. This was something they did for fun much earlier in their lives. So it's it's no wonder that he's having trouble finding it, because people also, once you get tied to a particular project, the developers, and there are these very close-knit communities in like for Ethereum or for Bitcoin, and they tend not to overlap a lot. They tend to be kind of self-contained within these communities, and so you walk away from Bitcoin to work on Dogecoin for a bit, you might have trouble coming back and then picking up those Bitcoin projects again.
Well, maybe they will pick up Dogecoin project when it will be back under 10 cents, which I see happening soon, because I don't think you could keep this pumping any longer. But and from here, I have another question. Is it seems like Ray Dalio, Goldman Sachs, and pretty much everybody only talks about Bitcoin and Ethereum. Nobody mentions, except for Elon Musk, nobody mentions any other coins like Polka or Cardano that you have mentioned. Why is that? And what would, and it seems like there are thousands of other coins. What separates other coins from Bitcoin and Ethereum outside of people already knowing them, like the network value? And if the network value is already established, why would anybody bother producing any other coins then?
Yeah, that's a great question. And it's a question that I would just say a lot of people in crypto struggle with. Okay, there's reasons to start a new coin, but most of the reasons that people use for starting one are the bad reasons, or the wrong reasons. But okay, so look at something like Cardano, which I think as of today is maybe number 4 or 5 coin, depending on how you count it in market cap. This was started by people that were originally Bitcoin people, and then the main leader of development for this is a man named Charles Hoskinson, who was one of the early people working with Ethereum, and he split from Ethereum over the dispute related to the DAO hack back in 2016. And he worked on Ethereum Classic for a while, and then finally in 2017 moved to Cardano, and leads a company that is the lead developer for this coin. So, they have positioned themselves, and by the way, I have some of this, so I'm just trying to be as neutral as possible. They claim to be, well, we want to supplant Ethereum. They're much lower in terms of market cap, and they don't even have a smart contract functionality yet. They have the ability to issue coins like Ethereum has, but they don't have a smart contract functionality. It's supposed to launch this summer, and so the case for Cardano is something like, well, I would say, they would say that we're more efficient, or we're a better thought out platform, that we don't make some of the mistakes that they do. What I think is more likely to be the case is that in every market there's dominant players, and there's a power law distribution of share and of users and so on. And in most markets, it's just the way that markets work. And I'm talking about in stock market, or even, you know, within like soft drinks or something like that, cars. So so what I think is likely to happen in the future is that, now this is my view, but it's like Bitcoin will be the king of the sort of value market, and then Ethereum will be the king of the smart contract platforms. But there will be plenty of space. This is such a huge opportunity going forward. There will be plenty of room for like niche players to come in and own whole market segments where, I mean, maybe it's like Cardano has positioned themselves with a lot of governments, for example, like a lot of governments in Africa and Asia, Singapore, and so on. And so maybe they own the government on the blockchain market, for example, or they own a very big chunk of it. And it's just something that the Ethereum Foundation or whatever didn't really pursue. And they so Cardano eats the lunch on this. Polkadot is a little bit different business case or use case. It's more, they want to say that they're like a, I don't know, umbrella of different specialty chains that have different like niche functionalities. I actually see something like Polkadot and not Cardano, because they're positioning themselves as a direct competitor, but you know, like Polkadot or some of these like you know, down the line, smaller ones like Avalanche, which this is an Ethereum competitor, or Cosmos, which is more of a Polkadot competitor. You know, I could see ones like Avalanche and Solana and Phantom and so on. You know, that they sort of are part of the Ethereum ecosystem, and then some of these others may you know, form other like ecosystems. So it's sort of like there will be a handful of players that really survive. They own either niches or they're the dominant player. But there's, as you say, there's not going to be, you know, 5 Ethereums that are all the same size and all have the same market share. It's just not sustainable. It's not the way that markets work. But so it's what's happening is right now, although a lot of crypto projects will say, well, we're going to be better than Ethereum, we'll take it over. There's such a network effect around Ethereum as well as around Bitcoin that it would just be really, really hard for an entrant to replace that whole like network effect. And I'm talking about developers and users and people that use it every day and trade it every day and so on, or use it for financial stuff every day. And it would be really hard to replicate that. But so I see the market as either being like Bitcoin, Ethereum, but then these smaller players can own niches, or they become complementary to the big players. They decide, well, we're not really going to compete head to head. We'll be the better version for this market segment. And so that's what there'll be a big shakeout, that it'll take years for that to happen. And that's why when I think about the market landscape like that, and you know, I think, well, what's the place for something like Doge? There's no place for it. It's not, there aren't developers for it. Does it have a store of value case? No. Does it have smart contracts? No. I mean, what's the use case for it other than as a meme? And that's where it still is it's more of a meme. Now, Elon Musk hires 200 developers and they build some interesting applications here. Well, then that might change things, but it will take years for even that to produce fruit. So it's it's a little of so I guess, you know, but the reason, just like Cardano, it was started one, to be a better Ethereum. I mean, so there was um, a sincere or a superior smart contract platform, let's just say. So there was that sincerity, and I think that still exists with a lot of people. But then to some degree, there's a little bit of obstinacy too, that, well, you know, the Ethereum people are, you know, idiots, and I'm not, and I get along with them, and, you know, we've got to do it our own way and not have to do it the way that the Ethereum people want to do it. And there's, you know, there's a lot of, I mean, a lot of American business, like consulting firms and so on, have started for that exact reason, right? Like people didn't want to work together, so they split off and form something new. And sometimes it works, sometimes it doesn't. I kind of like the guy that started Cardano. I met him, and I kind of liked him, and I think he's got some good ideas. A lot of people in the Ethereum world can't stand him, and because of his some of the things he said. But I try to be very I try to be objective and just look at it as much as from an investor standpoint as I can, and not get like personally invested too much in any one of these things, because I think that's when you stop, when you lose sight of things, you become blind to the downsides of your investment, and you don't know when to exit, and you don't know, okay, the thesis has changed now, and that's when you need to get out, right? When something changes for the negative. um, and and so that's what I think sometimes people in crypto, they lose sight of. They get very involved in a community, and the community reinforces the conviction rather than being neutral. And let's say yeah, a healthy neutrality that I think keeps your wits about you.
Right. Well, I think another concern is that this latest sell-off, at least to me, the correlation between all of the crypto currencies or tokens or whatever you want to call them outside of Bitcoin. The rest of them seems to correlate highly and move down and up in a very high correlation. So it seems to me it doesn't really matter what you own anymore. Is that some of those smaller coins are just higher leveraged Ethereum or high leveraged Bitcoin. It's they all move the same. So you might as well just own Bitcoin and Ethereum and then just pick your poison and pick your leverage. It doesn't seem to matter to me.
It's okay. So one, in a bear market or in a correction, then I mean it doesn't matter whether it's crypto or any other asset class, that there tends to be that in a way a crash tends to be a very high correlation volatility event, right? That you'll have during the financial crisis, or even in March 2020, precious metals, crypto, stocks, everything crashed all at once, and there was no rhyme or reason to that. But that's the nature of a true crash. In this case, what was odd is, and very unusual, is that most of the okay, so in 2008, when there was the crypto top, that corresponded to a top in a lot of speculative stocks, a lot of speculative assets in the stock market. And it corresponded almost exactly to that. And the moment of Ethereum's top was within a week of that big volatility explosion that happened in I say February of 2018. And so so in a sense, and then what happened is, let's say a stock like U.S. Steel, it sold off all throughout 2018 and bottomed out in late 2018 after falling by 75-80% during 2018. So that was very similar to crypto. So here are these cyclical stocks where crypto was following cyclical stocks that were indicating something about the economy, right? But what's unusual about what happened here over the last several weeks in crypto is the stock market didn't follow it at all. It maybe Coinbase and Tesla and MicroStrategy, and a few others, but there's almost no correspondence in the stock market, and which tells me a couple of things. One, that what happened is very crypto specific, and so it's like maybe it was a little bit of Elon Musk tweeting. I actually don't think that was a real driver. I think that the triggers were one, it just got way overbought. I mean, it made it precarious. And okay, so that's one. But then two, I think that there were a lot of, let's say there were a lot of people like Ray Dalio who frankly wanted in. I mean, he didn't say I'm buying Bitcoin a month ago. He said I'm buying Bitcoin today.
Right.
I bought Bitcoin today. When someone like Ray Dalio wants in, I mean, now it may not be Ray Dalio himself. I'm not saying that he's doing this, but when someone like Ray Dalio wants in, I mean, they might even make negative statements in advance, even as they're buying. And it may not be like an outright, Bitcoin is a fraud kind of thing, but they'll say, I don't know, it's very pricey and so on. And they'll make these kind of statements that are intended actually to nudge the asset into a better price for them. And I mean, it's extremely common. We all know that happens on CNBC and so on, that what someone is disclosing isn't always what their real intentions are, right? But so I think that there were some people that wanted in, and they had to nudge it down, and the way that they nudged it down is through some of these negative news stories that might have had a kernel of truth to them.
Right.
Yeah, sure, China is doing something, but based on the news stories I've read over the last few days, it's like not 100% clear how they're changing their regulatory approach, or whether they're really cracking down on anything or not. And if you look at, let's say there's news stories from 2019, 2020, China's cracking down, and it sort of, it's a question. It seems like almost like there's different people within the Chinese Communist Party apparatus somewhere that have different viewpoints, and they're kind of like fighting it out in this PR war to some degree. So things like that I think there's so there's a little bit of overvaluation, a little bit of intentional nudging it down to a more attractive price, so that some people could enter. And then I think also probably there were some people that were short this, and they wanted to profit from the shorts. They wanted to take advantage of the overbought condition. And I have no problem with shorts, by the way. I think that shorts are actually, they add a lot of value to the market because, well, they have to buy, right? They're going to buy at the bottom or near the bottom, and they provide a bottom to the market. They put a floor in it. So it's not a bad thing to have people short something like this. They keep the price more rational. But I'd say that I guess that part of what this is because it's not regulated, and there's not a any kind of body that's monitoring trades and saying you're spoofing. I mean, spoofing happens everywhere in every crypto exchange, including Coinbase and so on, where if it were a broker, then and you were placing these kind of spoofing, you were doing spoofing there, the CFTC would call you or email you through contact information you got from your broker, like, you do that again and you're gonna be fined, you know, $25,000 per incident or something like that. They'll give you a warning the first time, and then they'll start slapping fines on you the second time, or you have to go to court if you really are convinced you didn't do it. So there's nothing like that in crypto. So there's a lot of the deception behavior that Vic is described very well in his different books and talked about. It's much more intense in crypto than it is in the stock market or futures.
Right.
But does that answer your question?
Yeah, no, thank you. Yeah, it was again another very interesting and informative.
Yeah, it's I think that there's I don't think, well, I guess what my overall view is, I don't think that the bull case has changed really for Bitcoin. I think that the price was a little high and it did get overbought. But if you look at some of the, one of the things I like is this net unrealized profit and loss, which is on Glassnode. And I need to update this actually, but I think I've got today's data, but this is worked out pretty well. All right, yeah. So now it's dipped down. It may be hard to see, but it's sort of dipped down to this neutral position. Yeah, there we go. It's sort of dipped down to this neutral position now, where it's not in this whatever near euphoria condition. And so that's a positive thing. I think that Ethereum, it was in this euphoria range, and Bitcoin never really got up there. Right. But it's worked off a lot of that condition. So that's why I say, chopping around for several weeks, what it'll do is it'll the turn of the trading is what will push this down further, and we'll get to a place where bull market, it's I think might be hoping too much for it to actually get oversold, but it'll at least be in a neutral place, and then it'll be attractive at that point to people that are worried about buying at a top or buying near a top. So I think that's what is, it's a little bit of a market technicals, like the internal features of market being clearly overbought, but then also I think the bull case is still valid. So there are people that want to nudge it down, and they have an interest in doing that, and they push or they start rumors of different things in order to nudge it. But if the market were really in a more neutral position, then that nudge would have very little effect, right? If it were oversold, then the nudge wouldn't have that much effect. It's like the nudge is just taking advantage of the overbought condition. So it's there's a reflexive property to markets that it tends to respond differently depending on where it is, right? So that's what I'm watching, and I would say that I think that the bull case is still valid, and I just think it could take a few weeks to a month or so to work off, and that's a very good thing if it does that. I would hate to see it, try to shoot back up to 65,000. I think that would it would really concern me if it did that, because it would just be like a huge short covering or something euphoric at that point, which I think it's better for it to kind of grind around for a bit.
Right, exactly. Otherwise, it may be like the Ethereum before the sell-off, when it was just going up and up and up without any pullbacks. Like we were even saying that it's a little exuberant.
Well, what this was about was, in my view, well, it's a couple things. It's the well, there were several things that are driving it. One, I think that as I was saying back in January or February, when Vic was still hosting this, that I thought that Ethereum was undervalued compared to Bitcoin, especially at a Bitcoin to Ethereum ratio of something like where it was as recently as, let's get that ratio up here, as recently as this was just in April, late March, that it was trading at a 0.03 Ethereum Bitcoin ratio, and at this point, there were people on Twitter that are longtime Bitcoin people that were posting like this kind of triumphant crowing, against Ethereum because they'd won, they defeated Ethereum, so to speak, because it can't rally, as Bitcoin is rallying, and it was almost at the exact point that this then took off, and so in my view, what this was, it wasn't, it was just a lag effect that had this been maybe a more quiet market, less violent, then this rally might have been happening all along, and you wouldn't have seen this sort of final push up, which was really the result of Ethereum catching up to Bitcoin, in my view. It got up to 0.8 Ethereum Bitcoin ratio, which now is like at 0.067. And I think 0.08, between 0.08 and 0.1 is probably a reasonable level for it. It was undervalued compared to Bitcoin. It got, in the depth of the bear market this last year, it or even toward the end of 2019, it was even lower. It was just at levels that it had not been at since 2016. So it really did. There was a very bearish sentiment against Ethereum that was much more bearish than even existed for Bitcoin. And I think what you're seeing now is maybe some of the bears are okay. They're now seeing, well, maybe the bear case is weakening, and there really is a bull case for Ethereum that's valid, and it's not just smoke and mirrors kind of thing that you're seeing. It's almost like what's happening with Ethereum is it's like, oh well, Tesla will never make a car. They're just always going to exist on the drawing board or in a computer, and they'll never have an actual car that they sell. And then when they actually start selling cars, well, okay, well, but they don't run very well, and so it's like successively the bear case becomes invalidated one step at a time, and that's 2020 is the year that's happening for Ethereum, but it's taken it this long because they're finally delivering on things that they said they were going to deliver on in like 2018, 2019. So it's been delayed, and that's what has led to the bearishness around it. That's maybe now lifting a little bit.
Right.
So, and that has all just happened in the last month or two. That some of the what are called EIP, Ethereum Improvement Proposal, these are now actually going through. There were people that believed it would never happen, that the miners would stop it, but they've actually passed and are going to be implemented here in the next month or so. So that's a big step forward for Ethereum. And then the 2.0, I think what's really actually what's interesting is some of these that the so-called Ethereum killers, like where Binance is, they basically have like a centralized version of Ethereum, and it's Solidity, it's everything just copy pasted from Ethereum, but run on their own servers. So there's no miners. All the validators are Binance. So this is just basically like a private label version.
Are you saying this is a centralized version of Ethereum?
Yes, it is purely centralized, and that's all that it is. But what's the case for using it is that because it's all centralized, they and they're not doing mining. It's all just run on servers. It's a lot cheaper to do transactions here, but you can't, like, there's not Uniswap on Binance Smart Chain. There's not all the other applications that people use on Ethereum, but there are versions of them that are kind of ripoffs. Like there's whatever Pancake Swap instead of Uniswap and so on. And so what this has done, because they actually had dented the share of transactions that Ethereum has seen over the last, this big ramp started in January, February, and it sort of just flopped around since then a bit, but nonetheless, because this has risen so much and actually taken share of transactions, it's pushed the entire Ethereum community into realizing that, hey, we can't screw around anymore. We have to make these things happen. We have to accelerate the schedule, or they're going to eat our lunch. And so they responded in a pretty smart way. And I think that this ramp here was after they made the changes to accelerate their whole development schedule, basically 6 months or a year. And it was entirely maybe it was a reaction, you call that, but it was the right reaction. It was the market leader defending its moat. So I think that was the ramp. Now the question is, how much of this ramp was real in terms of like real value being added? There was, as these charts show, there was probably near the top here, at least for a few days. This is saying from whatever 3rd of May. It wasn't a very long period, but there was some euphoria in this. There were huge profits, and what this is about, the profits that are sitting in accounts or sitting on the table that are unrealized. And so there were some huge profits that people, that long-term holders, short-term holders, everybody had, that they were sitting on. And so it was like this, Jenga puzzle where you pull out one piece and the thing crashes because it's more precarious market, very overbought market. But we've worked off a lot of that, and we're now back to this level is now back to where it was in December, which is not healthier. And so what that means is, in my view, is that it could rally here, but just so we don't see this 10% a day for 2 weeks or 3 weeks or whatever. That's not sustainable. But it could rally a bit and kind of grind around and still work off that more of that overbought condition. That's a healthy thing. And then it could retake its highs, but it could take 3 months, 4 months, 6 months for that to happen. And that's still up, like 70, 80% from the current levels. So that's a huge rally for even to happen in a year with any kind of asset. But it likely will if Ethereum delivers on what they say they're going to and what is on the schedule. Then it will be, it will earn a higher value than it has today. Let's put it that way. I don't know exactly what the valuation should be, but higher than today.
Well, thank you, Andy. And we'll see you next Wednesday. And hopefully we'll talk a little bit about hedging and other interesting stuff with crypto, like liquidations, how to make money of that. Because the volatility it's really is amazing right now in crypto.
And I expect it to continue. It'll definitely continue. And if you're long, and it's just something that you need to get accustomed to, because it's not going to go away, at least for several weeks. I don't think so.
Right. Yep. All right. Thank you and have a good night.
Good night.